Let's discuss markets and more with our guests on the show, Kunal Bothra as well as Naresh Purani, as always on the show with us. Kunal, let me begin by asking you, seems like there is a bit of a roadblock per se around that 23,600 mark. We are not passing that in a hurry. What's your verdict on the market and the fact that this is going to be expiry week? What kind of moves do you anticipate?
Yeah, I think some bit of traffic makes the market a bit more attractive, and I think it's a good sign that the indices are now getting into a range for itself. So I think we've gone through the last 2 weeks. One of the better rallies which you've seen for the indices, almost a recovery from 21,500, 600 levels towards 23,700 marks, almost like a 2,000 pointer rally for the Nifty and a 4,000 to 5,000 point rally for the Bank Nifty. We were on the verge of breaking past about the 52,000 mark for the Bank Nifty, but I think now with the range setting in, I would probably believe that it's time for the indices to consolidate. Now, in this phase of consolidation, I think that the range for the index, which I would believe should be 23,200 to 50 mark, which should be a strong support. I think any dips towards that support for the Nifty should be taken as a good buying opportunity.
Okay, buying opportunity, buy on dips is the nature of the market, and watch out for that 52,000 level on the Bank Nifty. Naresh, what's your view on the market setup, and what are you anticipating? Is your call to buy on dips, or is it just consolidation which is going to be the nature this week?
So closer to similar view, 23,200, 300 remains a band of support, and that's a buy on dips. And the second strategy is to wait for a breakout above, say, 52,000 on the Bank Nifty. If that happens, we get into a buy on momentum. Same way, 23,600 crosses on, say, the Nifty. We go into a buy on momentum, because what we are seeing is some of the heavyweights are very interesting chart formations. We are seeing a decent enough recovery in ICICI Bank, getting close to an all-time high. You have HDFC Bank holding on, and now only Reliance Industries remains a stock which is yet to get into a trend, but it is very close to the supports of 2850 odd levels. So out here, the view is either buy on dips to 23,200, 300, or in momentum about 23,600.
So that's a view on the index and some of the individual names. But
pick up on that. You've always liked the likes of DRL, Sun Pharma, but what about Cipla? What about Natco Pharma?
So supply is something which has been range bound in the last 1 month. So no major price trends coming out for the stock in the near term charts. I think when we look at the recent support, 1460 is a very recent support from where the stock had bounced off at the start of this month of June, moved towards 1580 mark, and I think it's very close to now midpoint of this range. 1500 is where the stock is trading right now, so which means closer to 1460 levels I think would be a good buying zone for Cipla. On the other hand, when we look at the other pharma stocks, Biocon is something which has actually been one of the stronger names. Around that 300, 320 was a very big congestion breakout for Biocon, a multi-week, multi-month resistance, and now I think at closer to 340 levels, that's a stock which still continues to look attractive. So I think as a fresh play, I would look at Biocon from the entire pharma pack. Currently, looking at the charts on the medium-term basis.
Okay, Biocon is what Kunal is liking from within the pharma pack. But Naresh, what about some of the diagnostic names, Metropolis, etc.? Do they look or make for a better, slightly medium-term bear as opposed to pure play pharma?
So in terms of a technical structure, pure play pharmas have a relatively better chart. We've seen a consolidation for a long period of time for Metropolis as well as Dr. Lal Path Labs. The only concern is they tried to make like a 52-week high, but the follow-up momentum was not great. So if you look at Dr. Lal Path Labs, 2800 was the previous high in November of this year, November of previous year. The stock went above that, but did not see any follow-up. Same is the case with the Metropolis. If you look at it, the stock had a top around this 1800 mark, 1800, 1900, broke above it, did not make a major move. So out here, yes, the trend seems to be reversing, but the momentum is not great. At the same time, you can see a better momentum in a lot of mid-cap names in the pharma side, whether it's a Granules or a Natco Pharma. We are seeing good breakouts happen and good follow-up action. So I would prefer pharma as of now.
Cap good space, your Siemens, ABB, Cummins, Voltas, all put together. Where is it that you would execute a fresh long, perhaps?
So I think Cummins is interesting. That's a chart which has given a breakout today above that 4,020 mark. I think 4% up today, is 4.5% up, and I think right throughout the day, the stock had shown good momentum. The concern with L&T is that even though the stock has been quite buoyant over the last 2-3 weeks, but somehow over the last 2-3 days, the momentum is slipping by for L&T time and again. So I think the stock made a dash towards the 3680, 3700 mark. Just about last week or so, it's come down towards 3500 levels. So which means that the stock is still struggling to get into a breakout kind of a mode as compared to a point where many of the other peers are getting to a breakout. So I would probably believe Cummins at current levels could be attractive. Voltas on the other hand also, I think something which is very attractive. It's holding on to that 1500 levels broadly for the last 1 to 2 weeks. And time and again, I think we've seen the stock getting to a breakout even after those odd phases of sharp correction which comes by. So Voltas is another name to be bullish on.
Okay, Cummins, Voltas, those are Kunal's top ideas from within Cap Goods. We're going to take a very quick break on that note. When we come back, we'll have our fundamental expert as well join in on the show.